What's up everyone, it's Candy with MoneyVest. Time for us to talk about PayPal's earnings, and PayPal here dropping a little bit over 9% after the earnings from the fourth quarter of fiscal year 23, which I actually honestly believe were fantastic. I think we did get pretty strong numbers. EPS growth was strong, and we did also beat expectations. PayPal also beat revenue expectations. The only problem was a couple things that I was able to note down. Number one, active accounts that continue to decline a little bit. Quarter over quarter, we've come down from 435 plus million active accounts now down to 426. So that's about, a 9 million account loss in the last 4 quarters alone, or maybe 3 quarters. And then the second thing was the guidance for fiscal year 24 as a whole. The entire yearly guidance was not that great because the company is expecting flat earnings, basically not really growing, and GAAP EPS is going to be a little bit lower. Cash flow is going to be flat, and the revenue was also going to be somewhat flat, given 2023 was also a year where they struggled a lot from a fundamental standpoint. So I'm going to break down everything you need to know. It's going to be a complete update on the earnings. And as always, make sure that you drop a like and don't forget to subscribe to the channel. A couple announcements that I want to make is that our MoneyVest platform is coming along very, very nicely. I shared some sneak peeks and some previews in my previous market update video, so definitely do check that out as well. And I did also post a members only private video with the 12 stocks that I'm currently buying or looking to buy with my buy targets specifically on there as well. So this is basically my full shopping list and ETFs that I'm planning to buy as well. So you can access this through our Patreon. Link's going to be down below. I did open up a few more spots, and you can access all the 45 plus tutorials and videos there, full access to all of our spreadsheets. I'm going to be starting a newsletter as well for all the members that's going to break down my analysis, broken down by fundamentals, macros, and technicals, best stocks and best options and best trades to also take and participate in. So that is something that we are looking to do, is offer up weekly or bi-weekly newsletters that are going to be super actionable that you can actually use to make own decisions as well. Of course, do your own due diligence on there as well. And Discord channel is also included. So definitely check out the links down below, and also do connect with me on Instagram. My handle is going to be CASWRP as well. So earnings coming in at $1.48 versus $1.36. Revenue came in a little bit over $8 billion versus $7.87 billion. That was, again, the consensus. And revenue increased 9% in the first quarter on a year-over-year basis, and $7.3 billion was the previous year's fourth quarter. And the number of active accounts did fell 2% to 426 million, trailing analyst expectations of 427 million as well. Net income did jump significantly. I mean, 52% growth year over year to 1.4 billion. That's $1.29. That's up from 921 million or 81 cents same time last year. And the company reported total payment volume, so TPV, of 409.8 billion, up 15% from same time last year, and that's comparing to $405 billion expected by analysts. So what's clearly happening here with PayPal is very, very clear. So what we have witnessed in the last couple of years with PayPal is that it has dropped off on active accounts. So people are not using, not new people are using PayPal, and existing ones are also leaving the platform, but the people that are still on the platform are using it more. And it's actually, I'm a very good case study for PayPal, because honestly, I've been on PayPal for now over 8 years, and I was not that active on PayPal before. But ever since I've had experience in different platforms like Payoneer and a lot of other ones that I did not like, there were a lot of issues, and their customer support team was absolutely awful. And I moved all of my business revenues and everything transaction-wise to PayPal. Now PayPal handles everything for me. So I've kind of experienced myself that I'm transacting more and more on the platform myself. So I'm actually a very good case study of how I've been on the platform that I wasn't using all that much, and my transactions have only gone up, and I'm engaging more with the platform moving forward. But of course, if there were people that were happy with their other service and they don't want to switch to PayPal, or they don't want to keep their business on PayPal, I could see why they could quit PayPal altogether and don't want to use the service anymore. But for me personally, since my income is globally, like I'm collecting revenue from all over the world, it makes perfect sense. And there's not really any competition from Google Pay or Apple Pay, because for what I need, PayPal is the best solution. Knock on wood, and they're doing a great job. So what's happened in the last couple of years is really this. I mean, the revenue has increased. The engagement has increased substantially. Margins have been somewhat stable. Active accounts have gone down. Total payment volume has gone up. Now, the only way active accounts goes down and total payment volume goes up is through engagement. Engagement is up for PayPal. Now, for the full year guidance, the company anticipates full year earnings of $5.10, which obviously came in below expectations of $5.48. So they missed on EPS guidance. They missed on TPV guidance. And they also, actually TPV was surpassing the previous expectations here, but they did miss on the active account guidance, active account expectations basically. So EPS beat, revenue beat, active accounts missed expectations, earnings per share guidance wise missed expectations. For the fourth quarter, PayPal estimated year-over-year earnings per share growth would fall in the mid-single digits, so 4 to 5% drop here, compared with a consensus estimate of 8.7% as well. Jamie Miller, financial chief, said on the call earnings that the company will stop providing annual guidance. Thank you so much, Jamie. I think that's really important. And instead just provide an outlook for the current quarter. And given the considerable changes underway at the company, we believe it is prudent to guide revenue 1 quarter ahead and provide updates as the year progresses. And PayPal announced last week that it would cut 9% of its global workforce, or about 2,500 jobs. And last month, the company introduced new artificial intelligence features, of course, with Alex Chris's first new next chapter and the Innovation Day as well. So it is by no means a dying company. Like, that's something that I think a lot of people need to understand, is that PayPal is by no means a company that is dead or is going away or is done for. And that is one of the biggest challenges, biggest problems that PayPal is facing, is that investors seem to have lost all confidence in the stock because they believe that PayPal is dead. Total payment volume growing 15% year over year, revenue up 9% year over year, non-GAAP operating income margin of 23.3%, so a little bit of expansion there. And of course, non-GAAP EPS of $1.48, with the entire year sitting at $1.5 trillion in total payment volume, and then almost $30 billion of revenue, 8% growth, and a transaction margin here about $13.7 billion. And we've got non-GAAP operating income, $6.6 billion for the company as well. This right here focuses on profitable growth. So fourth quarter 23, again, revenue increasing, transaction margin increasing. We've got non-GAAP EPS increasing 19%. And we've got non-GAAP operating income and margins also expanding a little bit further here. We're driving significant transformation across our company and are committed to making the necessary changes to our business to drive profitable growth in the years ahead. And shares of PayPal are up 3% this year as of Wednesday's close, after falling 3 straight years, or about 80% off from their highs from back in July of 21 as well. And this right here is, again, one of the problems I think which the company is facing right now is the active accounts, 426 million. This is one of the reasons why I believe PayPal dropped. Also, number of payment transactions was up 12% year over year. We got transaction per active account of 14%. This is what engagement looks like. This is what engagement is. Number of transactions, transactions per active account, monthly active accounts, 218 million. So all these are signals or key performance indicators of engagement. This right here, again, total payment volume and total revenue. This is going to be free cash flow coming in at 4.2 billion. Next year, they're guiding for 5 billion. So if you do the math here, 5 divided by 4.2, we're looking at least a 19% growth in free cash flow, right? Free cash flow can be as high as 19% growth on a year-over-year basis. And free cash flow of 2.5 billion, which includes this 1.7 billion net positive impact of originating European buy now, pay later receivables as held for sale, and the subsequent sale of these receivables as well. Now, this is where the guidance comes in. They're expecting, again, fiscal year 23 non-GAAP EPS of 5.10, in line with prior year, so $5.10, which makes the stock really, really cheap. If you take a look at $58 divided by 5.10, 11.3 times earnings multiple, or said another way, we're looking at a earnings yield of over 9% for the company, right? Almost 10% earnings yield, with free cash flows sitting at $5 billion, right? So if you come down to PayPal, the actual price right now is $57.75. So subtract about 9% from the market cap. So 68 times 0.91, we're looking at $61 billion divided by 5, 12.2 times free cash flow. So you got a stock that's trading at around 10 times earnings multiple and about 12 times free cash flow. Still looking for some reasonable, modest growth here. This year may not be a year where PayPal grows at all. Maybe it starts to stagnate a little bit, but the numbers continue to be decent. I would say not super great because there's no growth going to be there in 2024, but it's a company that still has pretty decent numbers with a strong balance sheet as well. Now, this right here is from fourth quarter 22, where you'll notice for the last 4 quarters, PayPal's active accounts have declined from 435 to 426 million. But again, monthly active accounts, this is what's really interesting. It's gone from 221 to 224 million. So there's less accounts, but people are spending more time on PayPal. Number of payment transactions have gone from 6,000 to 6,798. Then we've got transaction per active accounts gone from 51 to 58.7. And that's exactly what we're talking about, right? this is what it is. I mean, engagement is up, even though active accounts are down. So that doesn't make the company a dying company. People who are on PayPal are engaging more. People who are not engaging on PayPal are just leaving the platform. And it's kind of a way for PayPal to rinse some of the non-active accounts from the platform itself and focus more on engagement. Because at the end of the day, engagement is what drives TPV, which is what drives revenue, which is what drives margins. The company cutting their workforce, doing a lot of share buybacks, I think is all going to be positive to the overall earnings because they're going to be doing at least $5 billion worth of share buybacks. So if you do the math, $5 billion, whatever amount of shares they can buy. So if you do, let's just do this. I don't even know how many zeros that's going to be. So 1, 10, 100, 1,000, 2,000, 100 million, 10 million, 100 million, billion, 10 billion. So just one less zero divided by $58. We're looking at 860 something million shares. That's a lot. That's a lot of shares that they're going to be able to buy back if they're planning on doing a lot of share repurchases of $5 billion. So that's, again, this is going to obviously help take some liquidity out of the market here, take some supply out. And at the same time, the cost cuts with the employee reductions is going to help the earnings, free cash flow. Again, valuation's cheap. So this is a stock that, for the last 3 years has not really performed for unknown reasons, in my opinion, because look, there is competition. I totally understand. There is a lot of stories around PayPal that investors believe that this is a dead company, but the numbers still are yet to suggest that. I mean, they're still posting some modest growth. I mean, 8 to 10%, 12% is not bad growth. Engagement is still up. Earnings were up 52% year over year. So $57 is going to be that support. So this right here is going to be that level to watch as a support for PayPal. Resistance is going to be all the way to $65, all the way down to low 50s. Another really, really important support level to keep in mind for PayPal in case we see another breakdown below this. And that is going to be that next level to watch for the company. So again, very strong downtrend, trading below the moving averages. And I'm sure there'll be a lot of downgrades and a lot of price reductions on PayPal today for whatever reason. So I can't wait for those to come hit the wire so I can take a look at what type of madness is going on with PayPal's earnings and, of course, the analyst consensus estimates as well. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Also do connect with me on Instagram. Check out our members only private videos, my full shopping list with all the stocks with my buy targets as well included. And as always, happy investing. I'll see you all in the next video.